All right, good morning. There's this low, there's this low, and there's this low, but this low has been used already. So there's not a low. Well, there's this low, and there's this low. This already has a red line there, so it's fine. Should be a black line here. Yeah, down here. Maybe a black line here. Cause I wake till 2 a.m. yesterday, looking at charts. Man, oh, that's about it. Really. It's about all the lines that we have and stuff. Price popped up from here, so may come lower into the black line and pop up maybe. We'll see. Our low. Price come to this black line, so let's see how the market behaves on market open.
This video is brought to you by the award-winning prop firm, Fidelcrest. Right, folks, here we are on Trading Up. We've got Nathan Williams in the house. Now, we've just done a fantastic podcast. Go and check it out. Link below this video here. But what he's about to walk you through is the automated software that he created.
This video is brought to you by the award-winning prop firm, Fidelcrest.
Strategy.
This video is brought to you by the award-winning prop firm, Fidelcrest.
Trading. So you're going to get to see that, and it is comprised of a lot of the ICT concepts. So he's sort of broken them down.
All right, so price came to the black line and really bounced. We want a black candle close, want a black candle rejection close, whatever you want to call it. Want a black candle close before we take our trade.
Automated them so that it makes back to the show, Nathan.
Thank you for having me.
Right, let's share your screen and check it out.
Fidelcrest is an award-winning prop firm that funds traders with up to $2 million and offers generous profit splits up to 90%. So one thing that really sets Fidelcrest apart is their no minimum trading days requirement on their challenge and verification stages. 30K.
Your days has typically been trending down.
Verification stages are eligible to receive a bonus payout of up to 30K on top of their funded stage profit split payout on performance. And be sure to use promo code TradingNut, all one word, to get 10% off your next challenge. Click the link in the description below or the card above to find out more.
So walking through here, everything, this is AUD USD. Over the last 3 days, it's typically been trending down, maybe a little longer, 4 or 5 days. Yet today we had a nice bullish move. During the podcast, you asked me during the round of questions my favorite trade setup, and it was a change of character. So I'll walk you through that today, with the softwares. This first software here is what I call the market maker tool, based on concepts that I learned from Steve Morrow, and then this is my institutional tool based on concepts that I've learned from ICT's mentorship. Cool thing about this institutional tool is I can see all of the ICT concepts, order blocks, predictive structure, change of character, fair value gaps. I can see them on multiple time frames, even though I'm on, and I can stay on the same time frame. So before expires, I love to trade or entry off of the 5 minute time frame. So I'll stay here on the 5 minute, but I'm going to analyze the chart with my tools on a 15 minute time frame. So with AUD USD, it is a natural New York session pair, with the USD, as the quote pair. So for me, I want to understand, what is the best time of day to trade? That's going to be your
It wasn't a bad close. It wasn't the best, but it wasn't too bad at all. So wait for the candle to close still.
your New York kill zone. Again, another ICT concept. So you click on that there, and there it is. It highlights as the quote pair. So for me, I want to understand, what is the best time of day to trade? That's going to be your New York kill zone. Again, another ICT concept. So you click on that there, and there it is. It highlights your actual New York session. All right, the kill zones, 3 hours. Like I talked about, there's a 3 hour window. I trade 3 hour windows, either the London kill zone or the New York kill zone. Look for my setups there. So we're gonna buy, and you're probably wondering, well, Nate, how do you know how to get into this trade here, and how do you know how to get out? All right, great. So first thing I always look for, I'm looking for change of characters. It's the first thing I'm looking for. So I click on the change of character button, 15-minute time frame. All right, and there you go. So I got your button, 15-minute time frame. All right, and there you go. So I got the last 3 showing here. Cool thing, you can show just one. You can show the last 25, or for this demonstration, we'll go with the last three as it shows the move or the change of character before the kill zone starts. So you see here, 15-minute time frame. I had a 15-minute, change of character before the kill zone started. So I see that, and I can actually see that the line stops on this candle right here, which tells me that these last three candles were one 15-minute candle, telling me that, okay, this was a fair value gap, all right, due to the large institutional candle clearing these highs out right here. So I naturally go and select fair value gap, and sure enough, it highlights the 15-minute fair value gap for me at the same time. So you can now see the last three change of character, but also the last three fair value gaps, all right? During the kill zone, of course, price continued to move up. You had a pullback into the actual fair value gap. You had a bullish engulfing candle. For me, my entry right here. Stop loss.
It's really weakens right off this thing. It's not even giving a close in here to enter or anything. I mean, closing above here is pretty nice. So I prefer to close down here so I can reach the low. Or I'd have to get in on the wick. I don't want to do that.
Loss. Typically about 3 pips below the low. 3 pips is due to the spread. So I've got a stop loss of about 15 pips. About 40, is that 14.6? It's called 15 pips. All right. So 15 pips stop loss. My entry is there. Now, naturally, you're wondering, what about you take profit? Well, for me, I look at, in this instance, because of Asia level being so high, and we're entering down below Asia high, and we've had a change of character. Naturally, there is liquidity here, and of course here, which is Asia high. So let me go and look at my Asia levels. All right. So I can literally use my market maker tool, highlight Asia level here. I can get a sense that, hey, Asia high is there. That's a natural TP level. But then I also want to understand, my ADR level. The ADR half day, for those that don't know, you can definitely go and check it out. The half day ADR, so your average daily range, half of your average daily range is a natural target as the market moves in cycles. And most days you're going to get a move to or away from your average daily range, half day. So I click on my ADR. It shows me both my half day and full day ADR levels. So I now have two targets that I can go for. With this TP here, TP number 1, that's 20 pip, and TP number 2 is 26 pips. For me, again, not a trade I would take, is due to the parameters of my 1 to 1.5, but it's a nice setup that I want to show of how my software works, and my favorite trade to actually take.
And can you show us the order block and breaker structures, how they sort of paint on the chart as well?
Oh, yeah, sure. So the cool thing is you can actually go and take these off and on. So we'll go through and just demonstrate the software. So we'll turn off the ADR here. We'll turn off Asia. All right. Let's hit the clear button. Clears everything out. Makes things easy for you. All right. So we're on the 5-minute time frame. Let's go to the 15 just to make it a little, just on a larger scale there. Let's say we want to look at the order blocks. So I select the order blocks, and I want to go with the H1 order block. All right. And there it is. You got the H1 order blocks. If I hit 2, you now can see the second on both the top and the bottom. You hit 3, shows the third. So you get to see your order blocks based on the H1 time frame, even though we're on the 15-minute. Clear. Breaks of structure, showing you your breaks of structure on the H1. I can change that to the H4. Let's say H4. There's our H4 breaks of structures, and so forth and so on. So pretty cool. You literally can just analyze the entire chart, no matter what time frame you're on, just by a click of a button. Making things as simple as possible. Breakers. We'll go with the order block here. So we'll go to the 1-hour order block. Let's say that you want to just look at the zone itself. You can hit zone and take the lines off. Let's say you want to look at just the lines. So now you can see the bottom, the 50% of that order block, and the high of that order block. So then if you want them to get together, you can have them together. And then a lot of individuals, a lot of traders love to aim for the 50%, of fair value gaps in order blocks. This software tool allows you to see both the actual zone or the block itself, the lines, or if you just want to see the lines by themselves, you can see just the lines by themselves, areas there. So pretty good tool, made to be able to be as simple as possible. London kill zone there, New York kill zone right there. Literally just highlights. It's all about making things simple and visually accessible, without having to do too much work and flip back and forth between time frames.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko,
Really intuitive and easy to use. So well done on that. Now, what's the best way for traders to get hold of you?
For me, Instagram is always the best place to find me. At Nate Got the Bag. So NateGotThebag.
Well, look, guys, as mentioned before, we did do a podcast with Nathan, and the link is below this video, along with the link to his Instagram. So go and check that out afterwards. Whilst clicking around down there, hit subscribe, like, and the notifications bell, and we'll see you in the next video.
Closing down here doesn't necessarily have to close down there, but would prefer it closed down there. Otherwise, would have looked to get in on a week, but we didn't want to get in on a week. We didn't want to get in as the price was still forming, because you never know what it's gonna do, because you never know. Watching the US, the NAS, and this was a low. It's not a low in the US though. There's a low here. But this low was actually good here on the NAS. And then have a drop in here. And the drop here. So if I was using this low, then I mean that first candle that made sense. I'm risking 350. Okay, but 700.
Press. All right, folks, here we are on Trading Nut. We've got Paladin in the house. We've done it at fantastic, and you trust me, you got to find out more.
So for GU, so the entire month of December, price action wasn't really the best. As we can see here, we had consolidation, so it was very hard to find some trade setups in December, compared to the rest of the year, because the rest of the year, it was a very clean, as we can see, we had expansion, retracement, expansion, retracement, expansion, retracement, whereas in December, we're just consolidating. So this trade, what I was looking at was so this was my last trading day. My first trade idea was, as we can see, we have a trend line here, and as ICT traders or smart money concept traders, what we look for is liquidity. And we had these equal highs in here, and retail traders would place their stop loss above this high. There's equal highs, there's a trend line. So at that point, what happens is price starts to reject, and price creates a liquidity grab, comes to that liquidity, the equal highs liquidity, the trend line liquidity, and it created a breaker block to the downside. So now I had the bias that we are bearish, not just because of this, but also on EU. What I was looking at was, so we start at the daily, always at the daily, always the higher time frame backing up the lower time frame. So start the daily, we see that price came, grabbed this high, took the liquidity above this high, came to this order block, daily order block, and I was looking at some type of rejection at this area to see if we can see some bearishness. Then on the 4 hour, I saw this bearish trend line, and under trend lines, we know that there is liquidity. So on GU, that's where I had the bias that we were bearish as well. So I was looking for sells. The moment we grab liquidity here, my first sell setup for that day was actually this bearish 4 hour order block. And if you go on the lower time frame, like I mentioned, we need lower time frame entries, 1 hour or 15-minute. I saw this 15-minute order block. So I entered right here. I entered here, placed my stop loss for a 1 to 2. And what happened was price at my stop loss. However, I noticed that we do have this 1 hour order block as well. And this could potentially just be a liquidity grab of this high coming to this order block. So I decided to place my stop loss above the high for around 20 pips for a 1 to 2. And then I ended and it hit my TP at a 1 to 2. So for that day, I had a 1 loss in the morning, 1 win, but I ended with a 1% profit because for this trade on my aggressive account, I risked 1%. So I lost 1%, but this trade I won 2%. So 2 minus 1 is 1%. And on my 400K funded account, that's 4K made in 1 day using a 50% accuracy and a 1 to 2 risk to reward. So this was like my last trading day. 50% not bad because of my 1% profit, which is a lot on the funded account. So yeah, that's basically my last trade of the year.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now by
Trading up, we've got
Euro yen before we go on to the data collection on the spreadsheet. So first of all, as you can see on Euro yen, naturally, if on the 12-hour time frame right now, we are very bearish, and you can just see by the downtrend. Now, this was a trade we actually took back in May, so it is quite some time ago. However, I do class this as trade of the year, which is why we're covering this. As you can see, high, low, lower, high, lower, low. So price is in that downtrend. Now, price, as you can see from a momentum standpoint, we've seen an impulse to the downside, and we are quite corrective coming back up, and we're coming into this supply region up here. However, the thing that caught my attention is price hadn't actually tapped that. Now, something I'll encourage you guys to do is look for buy to sell / sell to buy setups. Now, what that actually means is instead of waiting for price to get up there, see if you can capitalize on a move to ride price into that supply zone. So what I did was actually identified that even though the 12-hour is bearish, well, the 4-hour is still bullish, as you can see here. We've got the low, high, higher low, higher high. Even though we've only just barely broken the high, we still have done that, which is why that is classed as a higher high. Now, for my actual entry, what I looked at is a demand zone down here. Now, the reason why I saw this as a demand zone is because we saw sideways movement, change of character, which means buying kicked in between point A and point B. So I then look at this candle right here, the previous candle before the change of character. However, something I'm a big fan of, and like I said before, I encourage you guys to do, is looking at handles. Now, if we look at this handle, it sits within the demand zone, and this isn't a coincidence. So what I do is refine that zone down to the 135 handle, because this is when big orders of high volume will take place. All right, and if we just drag that down to the 135, there we go. This is the zone I was looking at. And like I said before, because we had the sideways movement and then the impulse changed the state of price, because this was the previous state. Now, the idea originally was to ride price up into that zone. And that is why this supply zone up here was TP1, right? However, to actually validate the trade, what we need to do is watch momentum on approach. Now, momentum for me is a big validator of a trade. If you do look over a long period of time with data, momentum is one of the things that can impact your data quite a lot. So the limit is not set at the moment. However, as we start to retrace down quite nicely like so, that's when I have the confidence to set, because that tells me that price is reacting quite nice to coming into contact with the liquidity over here. And as you can see, this was a very nice entry. It triggered, came into the demand zone, and we start to pull away quite nice. We come back in, and there's actually a re-entry here based on a 15-minute POI. Price tapped TP1, which is, of course, that 12-hour zone which we were looking for. However, the 12-hour supply ends up getting broken through, and then we start proceeding to the upside. Now, of course, we need to get into a habit of taking partials along the way, right? You can't just let price run for 1,000 pips and not take any partials. start taking partials and watch your trading account grow, right? So TP1 was here, we got out quite nicely, and then we started to scale out along with the position. And of course, with the stop loss, what we also started to doing was move that up as well. So it was the best of both worlds. And as you can see, eventually this starts to continue moving to the upside. And we just peaked at around 925 pips. So overall, very, very, very nice. And yeah, that ran very, very nice. And this was given out actually in our day in the life on YouTube as well. So this was not just given out in the trading level section, but also on YouTube. And that peaked for 925. We did have a tiny remainder, maybe 5% volume, ended up coming back to the trailing stop, but that's completely fine. As long as you're taking, the majority of the position out as you come into TP1 and TP2, that's what really matters. But overall, really, really nice position. Simple, H4 trend, nice demand zone. And yeah, no drawdown on this at all. Now, a couple of you may think, Matt, how did you get in the position? Because, well, spread, right? However, even though you read this level here, which is the 135 handle, that's not the level I'm actually entering on my MetaTrader. I need to take spread into account, so I'm actually putting it slightly above. So even though this looks like an amazing entry here, we actually put the number in around there. So it's taking into account spread, which you all need to do. So it's around 2 to 3 pips, depending on your broker. But no, overall, fantastic trade. Now, actually moving on to the data collection
Actually, before you do, I just want to ask a couple of questions. So one is, handle for you is just like a round number. Yeah.
Yeah. So when I say handle, it could be the 135, 137. Yeah. And that's just because these corporate, these big funds, for example, will interact at these levels.
And the second question is, so you've got no colored candles on the charts, just one color, no signifying. What was the decision factor around deciding I want to move to just a one color candle?
So like what we spoke about in the podcast, it's the small little tricks, just like with the watch list, for example, the small little tricks that just help. And now I don't really care if it's a red, green, orange, blue candle, whatever. It's the characteristic of the candle that I'm actually more interested in.
Interesting. Brilliant. Well, let's get on to the data collection stuff. And guys, I'm really looking forward to seeing this. So over to you, Matt.
Cheers. So if we move on to the Excel spreadsheet now, again, this is what we touched on again in the podcast. Very, very simple, right? So 3 basic things. Again, this isn't the final. This can literally just be draft 1, right? And draft 1 could be with trend, valid supply and demand entry, and momentum favorable, as we just touched on, right? And what you want to do is you want to go back 12 months. You can just use replay mode, and you can start tracking trades that all 3 of these meet. So it has to meet the criteria. You put the date, you put the time, and you put the return. Whether it's a loss, whether it's a win, you journal it. Now, it's very, very important you journal your losses in terms of the data collection, because if you want to, only do the winners, you'll come back at the end of the year and you'll have an amazing return. Is that realistic? Is that going to help you? No. So you need to put your losses in, because if it is a bad model and if all 3 of these are bad, well, then why do you want to take it forward into, draft 2, 3, 4? It doesn't make sense. So if it is a bad model, you want to dismiss it as soon as possible. So show your losses when they do come up. And by the end of the 12 months, we'll have loads of trades, loads of positions. I'll be able to see the win rate. Am I happy with the win rate? If not, can I add something in 4 that could potentially change the numbers and alter the numbers? Or do I need to think about potentially getting rid of one of these? And again, return. Am I happy with the return? Or perhaps are we not even getting enough trades in the first place? If it's only giving me 1 trade every month, do I really want to progress that model forward into draft 2, 3, 4? Again, that's the conversation to be had. But no, you wouldn't know these small details without actually doing the data collection. And once you've done this over, 10, 15 pairs, you're going to have a really, really nice spreadsheet. And that's when your trading will go from here to here.
And in terms of the stop loss and take profit for these, this kind of model, I mean, how do you determine, where my stop loss is and where my take profit is, so that it's like a regimented kind of thing?
I look at the 4-hour chart again, like I said before. I class the 4-hour highs and lows as protected areas. I'm confident putting my stop loss above a 4-hour high and 4-hour low. If it does get taken, that means there's a change in trend, and I'm happy.
You're going to make in realized profit, even if it goes to your target. You're going to spend more time worrying about this trade when there's so many other very good setups that aren't going to force you into something like this. When does the market chop at the open? When it's already delivered its move pre-market. And that's what you're seeing here. And then it becomes a 50-50. It could go up to that red box. I'm hoping that it doesn't, because I want you to see me get it wrong in these contexts, in this context, in this condition, because then it'll prove to you why I'm teaching you the way I'm teaching you. If it goes up there, you're just going to think, well, he just got it right again. I don't want that actually to occur here. I want to be wrong. I want to be wrong and say, see, this is why that condition is exactly what you should be fearful of as a trader. This is the thing you should be fearful of. Falling victim to this, insisting on it's going to go where you want it to go. Versus, okay, this is more work than it needs to be. Let me just close it and I'll come back at another time where it's cleaner. What does that mean, cleaner? When price runs very efficiently. It doesn't waste a lot of time. Retracements go to specific levels that are predetermined. We can see them. It has visibility to it. And it's easy draw. Where right now is it more likely to go to? Is it easier for it to get to 41.21 or to get to 41.0650? It's 50-50. Either one of those scenarios I could make a case for right now. And whichever one forms, the people that side with that, they will think that that was skill, and it's not. And that's what I fell victim to in the beginning when I was a 20-year-old. I was getting lucky and attributed it falsely to skill. Whereas now I'd like to believe I'm a little bit more versed. I've picked up a whole lot of wisdom through pain. So it's a big difference between me now and as a 20-year-old. But when you first start, you don't have that measuring stick, right? You just have your emotions. And as young men, we like to think, we're that caveman. We get it right. You're Thor, the unconquerable. This wick right here, half of that essentially was traded here. And we're looking at the bodies. It's not showing a willingness to get back above that original 5-minute fair value gap, which is that green box. So let's take a look at this on a 1-minute chart. How's that make you feel? Yep. 50-50, 41.0650 or 41.21. Who's going to be right? And the beauty is neither one is a factor for you as a trader, right? Is a factor for you you're completely at peace of mind knowing that you're not influenced by, oh, but if it moves there, I could catch that move. There's going to be so many other moves that are cleaner, easier to deliver, to transport your entry to target much more efficiently and faster, really. Whereas this, it could go either way. This candle we're on right now just went right up to that fair value gap and touched it as resistance, as you would expect. Low, low, and low. So their sell side right below here. If they're going to go below that, they're going to run it to here and a net consequent encroachment wick at 41.0650. And if some of you are new thinking to yourself, man, there's no way I would know how to do this. You will. It's the same stuff repeating all the time.
I fear
Everything worth doing takes a little bit more effort than the average person's willing to do.
see 4100.
And you should commend yourself for wanting to do this, because this is one of the hardest things in the world to do.
4100 here is going to be 4100 all the way down here. Come here. Give me the coordinates.
So now this is another thing I like to do, and this is how I've always taught my students as well.
4150.
Say you were late to get into the charts. Okay, first First, sitting down, you turn your charts on, you
But on
overslept,
the US,
you run to your charts, and this is what you see.
on the US, we're
What do
already
you
at
feel confident
4100.
about? Admittedly, I'm thinking
So does that make
410650
my red
if I'm looking at the
lines
chart
useless?
right
Because
now.
hey, calm down.
But I'm not looking at the chart thinking,
Does that make my red lines useless? Because because to be fair, this is extracted from the ES mini. So ES mini is what? Damn, man, this will not be good. This is not good. This is not good at all. Shit. Shit. What do we do? I don't like things like this. I don't like things that conflict so vividly. Makes me wonder, or should I even be using them? Clean bounces off of the 4000. Clean rejection. Man. I can't trust the US 500 red lines anymore now. Still looks good though, but it's like, can I really trust it? The red line was up here in this one. It was up here. This kind of looks different, right? I don't know. It's about the same. This is 4,000. So on this point here it was 4,000, and then 4,000 was lower. Shit. I don't know, man. Just gonna remove the red lines on the US 500, because the idea is that those specific values, those specific numbers are important. So if maybe I should just go pay for this and use this. I can, because it's delayed right now. So if I should just go pay for the ES mini. Even the SPY, let me see SPY. So which derivative is the correct one? Like which derivative is the ES meaning? Is it the SPY? Is it the US 500? What the hell am I supposed to use? Okay, let me see which one is closest to my platform. 4112. Platform is at 4102. So the US, platform is trading the US 500. So so I have to use this one. Or is it that maybe yeah, so what it is the red line is gonna be different on every chart. So but the actual, if I had a black line here still, it will be the same. Yep. We're 15 minutes behind, so but yeah, if I had a black line, on the 15, I guess I have to put the black line on 15. Oof, the line is different for the ES. Sheet, because on the 5th, on this is here. That's why I wanted to put it here that time. Because the US 500, I don't know what kind of gap it was, so this would have been the black line here still. So it's about the same. What I'm getting at is the lines themselves, price action itself will be the same, but the levels at which, like, so here it's at 4100, 4110, this one's at 4100 basically, but price action itself is the same. So maybe I'll just not have those lines. Maybe I'll just get my lines off of price action itself.
And for somebody that just got here, the 4106 level is this over here. The 4106 level is this over here on a 5-minute chart. On a 5-minute chart. That wick right here. And I think we just hit it, didn't we? Yeah, 4106.50. Hit it as consequent encroachment on that wick. And we'll see, does it want to offer any return back up into the gap that has formed? Again, this is, let me make another notation. Opening to Friday's close.
If our black line was here, then this would have been a trade today.
That blue shaded area, that's the range. We had it trade up into that, inside this range, this gap. Tried several times to do it. Let's move lower. We've hit consequent encroachment at 4106.50. And I believe that the better price action will be in the afternoon session. The opportunity still lies with, if the market can find a low, set up something as a run into the afternoon up here. I favor that. Based on all I'm seeing right now, that's what I favor. Anything can happen between now and over the lunch hour, but I would like to see that as a potential framework for like the 1:30 to 4 o'clock session.
So I'll be in here already. If I had my
So we
black
got up
line.
essentially about halfway through that gap. This is that blue shaded area represented by yesterday's day session close and 9:30 opening today. It's very hard for me to have this on my chart, and I hopefully am not making it harder for you, but this is a lot of lipstick on the chart for me. But I just want you to see the representation of that gap from yesterday's trading to this morning's opening. That range is important, and we see it trade up about half of it here. And I'm going to take this other stuff off because it's no longer seeing it. So just be mindful of that range here. Have those levels on your chart.
So I'm in long as well.
Yeah, that's going to be it for me this morning.
And I would have been
So,
in here if I had a black line.
Not a
there.
terribly
So
exciting one,
we'll
obviously,
just hold
but
this
you got to
for the
see
rest of the
some
day. He may come and stop us out.
elements
Like
of
10 pips under this.
price
Yeah,
action
that
that like
come and stop us out, but
we like to see deliver, and then also learning when I sit still, why I sit still, what constitutes a reason for me not to want to do it. And unfortunately, when you're new, you can't appreciate that type of lesson.
Bruh. I saw someone's chart, and on the chart, he had a line. He had a couple lines. I was like, yeah, that's cool. It's all G. But then, he had fair value gap, he had volume imbalance, and then I saw one called proportion imbalance. I closed the whole thing. I just closed the whole stream, the whole. I'm like, nope. Proportion what now? Are we going to school? Trying to learn names of animal places and things?
Something different, and it's only guided by experience. And no book, no educator, no 5-minute trainer, nobody's going to teach that lesson to you. You have to live it. You have to be hurt by it a few times and say, okay, I understand what this is now. It's pretty interesting how that 410650 level reacted, isn't it? I'm giving it time to see if it can get to that breaker. That's this candle here. If it can get above that, find some support. I'm going to watch that run there. ICT's addicted. Yeah, for the last 30 years, I've been addicted. It's the best drug on the planet. Price. If you look at the lows right at the 410650 level, as it hit that, see what the NASDAQ wasn't able to do? It didn't make that lower low. That was the whole point of me bringing it up, showing it to you. I got busy jawboning. So this is where we usually see, okay, gun to my head, okay? If I had to do something right now, I wouldn't want to do anything right now, admittedly. But if I had to do something right now, would I be more interested in being short or more interested in being long? I would be more interested in being long. I'd like to see it trade down to that fair value gap right there, reprice to here, and then into this area here.
He's a cool guy. I like this ICT guy. I don't really care about ICT trading per se, but I like the guy. He's a cool guy. What am I trying to do here? I think Jeff is watching him right now too. Jeff loves him. Trading Decoded. I'm that cool guy. Yesterday, how I traded SPY. I like his videos on how I traded SPY too.
This is Jimmy with Trade News. Market is closed. Today was an interesting day. Basically, pretty flat as far as opening and closing prices go. We stayed in a relatively tight range, somewhere around $3 and some odd cents. The pre-market lines and target lines that I had on the chart before open came into massive help and play today. So I only took 2 trades today. The first one was an 8.6% win. That was an SPX trade. The second one was a 26.3% win. That was a SPY trade. I finished up today $850. And let's go ahead and talk about the trades not only that I took, but the trades that I helped other people point out and take advantage of. So right off the bat, I will admit, my first trade of the day was a little bit bold, but I felt pretty good about it. And I'll explain why. So as we were moving up, well, first of all, our pre-market range was pretty tight, 408 44 was the low, 410.13 was the high, and 409.28 was the midline.
It's talking about yesterday.
We found support down there at the 408.44. We had
It's
resistance
doing
up there at
also some
410.13,
killing,
and we found some
but,
intermediate support resistance on that midline throughout the morning. As we stayed in the upper half of that, for the most part, leading into the open, I did believe the move would be to the upside. I didn't play the open per se. You had the 9, the 20, VWAP, everything was moving up at open. And then we ran into this 410.76. Now, 410.76 was a pivot point, but I want to show you something about that 410.76 line. It correlates to this line on the futures at 41.31, which, as you can see, now this is a 5-minute chart. We could not get above it, okay? And if you guys have been watching or listening to me, I often find that the 76 line, it correlates. Now, 410.76 was a pivot point, but I want to show you something about that 410.76 line. It correlates to this line on the futures at 41.31, which, as you can see, now this is a 5-minute chart. We could not get above it, okay? And if you guys have been watching or listening to me, I often find that these lines are very, very, very usable, okay? Not for my SPY trades specifically, but I'll explain how it was usable for me here to avoid suggesting a trade to continue to the downside because of this right here. So, also, we had ADD open up here and basically dropped right through the floor at open. Even though we moved up on SPY, overall, the market was selling off, okay? We never got really back above minus 1,300, and anything below 1,500, which is here, becomes very, very sketchy as far as playing calls. Not that you can't do it, but the overall market is selling off pretty good when you get this deep in the red on ADD, okay? So we get up to this line, we reject it. Now, this line on SPY, 410.76, is the same as this futures line here, okay? So the fact that I was seeing futures have a very difficult time, at least on the opening candle, get through there and leading up to, okay? I mean, that line was pretty significant in the previous session for futures. Once we got below it, we stayed below it, and we're looking for it to continue to hold as resistance. We move up. We try for 5 minutes to get through this line of resistance. We're talking about this happening. We're acknowledging this sell-off on ADD, okay? I tell everybody, if we can close below this 410.13 support, do a break and retest, I would be a buyer of puts, right, for SPX. Now, I expected our first level of support to show itself right around here, okay, from pre-market. I would love to see it get down to the blue line. The reason I played SPX is because I didn't want to be in the trade for long, and I didn't believe it was going to make it line to line, okay? So I bought a pullback here, okay? I got into this trade right here, and then I got out very shortly after on the next trade, okay? The key for me was staying below this level here, number one. The 9 was already pointed down. We were holding below this resistance. Okay, it was support turned resistance. So I felt confident in taking the trade in the first place. I did wait for the pullback. Okay, I made everybody aware before I took the trade. I'm going to get into an SPX position. I'm looking for a pullback. I got in here. I got out here. Now, this area does not make any sense as far as why I got out there. Okay, unless you say, oh, okay, resistance here. That's why I got out. It has nothing to do with that. When I get into a trade, I know how much it costs me to get into it, and I immediately set a limit order to get out at $100 more per contract. So if I get into that trade for $1,500, I'm looking to get out of that trade at $1,600. And with SPX, it does not take long to happen, nor does it take a big move. When I'm playing 5 of those contracts, for me, that is a $500 gain. I'm okay with that. I don't need to squeeze thousands of dollars out of a trade. It's not the way I play SPX, okay? We have long conversations with our community about how I trade SPX and the way I trade it. It has nothing to do with the chart other than for my entries. So I will enter my SPX trades the same place and way I would enter my SPY trades, but I exit my SPX based on a profit target of $100 per contract. For those of you who watch SPX or trade it, you know that does not take a lot to do, okay?
I'm already watching
That's why
the
and
video
how I
at
trade
1.5
SPX.
speed. I'm
Nothing more.
looking to make
I
it
don't hold on to
faster.
it long.
That's
I
great.
hold on to it to where I'm supposed to get in and where I'm supposed to get out, and that's that. So I got into this trade and out of it.
Before pain is much more a factor, is wisdom out of potential to make more, out of potential to make more, or fixing a problem. Don't ever think that. Don't ever think that. If the market's ugly and you recognize it as being ugly, and you start feeling heavy chested, and you're breathing heavy, heart palpitations, that would be a stop out. Now, do I need to get in here and trade this and lose in front of you for you to appreciate the fact that this is exactly what you want to avoid? I don't need to push a button to do that. Everything I'm outlining here is problematic for you going forward if you don't listen to it. Contrast it with other days where it's easy. You know, every single time I talk about it on Twitter. When I talk about it on Twitter, those examples, they've been pretty much 98%. They're under the pretense of a low resistance liquidity run. You don't see me pointing out, oh, well, this is going to be a hard run here. is going to be a sticking point at this price level. It's sloppy, it's choppy. You don't want to trade in these conditions. And the problem is you'll see these things sometimes allow you to fix a problem, fix an error, fix a losing streak that you had that morning. And you'll think that that's skill. You see that lower low on the S&P? It hasn't been met with the NASDAQ. See that right here? Now, by itself means absolutely nothing. The fact that it's done so on a day where we've opened with a large gap lower, we've taken out the low here, here, and here. How many buy side now have we taken out? This high from here, this high here, this high here. So anybody that's wanting to sell on a breakout, they're short. Anyone that's already short feels confident. And we have a large gap still unfulfilled above us with an S&T divergence between the averages. So the averages did not confirm that lower low in NASDAQ. So assuming that we don't go crashing lower between now and 130, I would like, and this is not an invitation for you to trade, but I would like to see if it makes it an opportunity for the market to want to run up into that 41.21, 41.23 level during the PM session. And by having that as a potential narrative to work with in the afternoon, it allows you to just let the market do whatever it's going to do. But what happens if you come back at 130 and it has already done that? Then it's over. You missed it. There's nothing wrong with that.
It for an 8.6% gain, which yielded me $650 profit. Okay. Once we stayed below that, we did start to move down, and we couldn't make it quite down to our next line of 409.28. We start moving up, staying below this line. We break above it. We call out the fact that it's a lower high. Okay, it is a lower high, but it's a higher low. So we're wedging. So what do we need to do? We need to wait for the wedge to break. If the wedge breaks up, we should find resistance back up there at 410.76. If it breaks down, we'd be finding support down here, I would have said, right here around 409.57. Well, here's your trend line. If you can visualize it, I'll draw it real quick. Put it here. We'll put one here. Okay. We wait for the wedge to break to the upside. We look for the profits to go up here. Now, I didn't suggest this trade, nor did I take it. But when I see wedges, I try and make everybody remember to stay patient. Okay. It's very easy to get caught up and want to jump into these trades thinking you know which way it's going to go. The fact of the matter is we don't. Okay. Because truth be told, at this point, we were trending down. Okay. We put in the high a day. We got lower highs, lower lows. Okay. Lower high, not lower low. So at this point, the downward trend ends. It becomes a wedge. We're waiting for a break above or below this line or this line. Very simple. If you're aggressive, you would have gotten in either on this, or you wait for the close above these lines, okay? Conservative is waiting for the close, okay? So if you waited for the candle close, you can got in here, and you would have tried to make it up to 410.75. We didn't really like the chart this morning. I know I didn't. I was very fortunate to get into this trade. Now, this trade made sense to me because it became much rougher to trade after we put in a higher low. So this was, minus, before I exited my trade, it was very much downtrend, lower highs, lower lows. So I felt good about my trade when I took it, but I was glad to get out of it pretty quickly too. But we couldn't get back above 410.76. Again, we'll talk about that line up here, how hard it was acting or how solid it was acting as resistance. This is the futures, by the way, 5-minute chart. Okay. We start to move down. We're looking for a break and a hold below that pre-market high line. We get it. Okay. And then we drop right down to where we wanted to here, which is 409.28. I didn't jump into this, but I said, all right, guys, we broke the support of 409.28. This would be your retest candle if you're going to play a break and retest to the downside. So as long as we can hold below this line, we should make it down to 408.44, our next support line in line. We had some folks take this trade. I did not. That's okay. I would if I was going to take the trade.
I mean, yeah, what this guy says. So I was saying,
you can't observe it. It can be very, very frustrating, and it makes you get emotional. It makes you feel like you feel reckless, and that type of thing causes you to do what? Remove a stop loss. In this case would be right here. Mean threshold there. Stop would be there. I mean, there's a lot of things about this industry that don't get talked much about in books and such, but traders, that's why I love listening to people that actually trade, because what they say and how they experience and internalize price action, and listening and observing the frustrations or the elation that they feel while they're in a market move, to me is much, much more fascinating, because these candlesticks are really about psychology more than they're anything else. They're Rorschachs. They're like ink blots. You're going to make them say whatever you want them to say because you want to do something. You want to trade. You want to force a narrative. You want to force an idea. You want to do something that causes potential for you to make money, because that making of the money means that you're significant, and that significance is a powerful drug. That's why social media is so addictive.
This guy's interesting. I like
One
that.
more touch there. Now, on another day where we're not being met with high resistance, that would have been another entry for me, adding more to it. But you can't think that today with this, because we have all of these other factors fighting against you. And these are the things I was doing when I had my first year mentorship. And I was sitting in a room with GoToWebinar. I had 800 and some people, 868 people, or 864, something like that. And in the chat window, I had made the mistake of being able to see that, which was terrible for me because it was very distracting. And I was trying to teach this over the charts live, and I would get 1,000 questions. What about this and what about that? And I'm trying to do my best to try to service everyone's request and question. And it was such a state of confusion. Like, I couldn't focus. I could not focus, and I was frustrated with myself. I was frustrated with my students because they weren't willing to listen. They weren't willing to listen and see what it was I was showing them, and understanding there's a lesson in understanding that a high resistance liquidity run, you will see things in the price action. It doesn't mean that it's going to deliver like you want them to, and they still might deliver like you would like to see them deliver. But you can't actively seek trading in those conditions and keep peace of mind while you're trading.
I will never suggest a trade that I wouldn't take myself, and that is a fact. And then once we get into this trade, I talk everybody through it. Where is my stop loss? On this candle, it would be just above the wick of the entry candle, in this case, so 409.42. That's my stop loss. Otherwise, we stay below this line of resistance, and we make it down to our profit target. Now, inherently, people want to hold on to their profits beyond the profit target, and that's fine. I understand. If you're going to do that, at least trail your stop. Okay, move your stop down so that if it does pull back on you, you lock in profits regardless. Fine. But the reason I was very adamant about folks taking their profits here is because we were getting awfully close to the support line down here, 4104. Now, this candle at 1025, okay, 1025 on SPY, we were all the way over here. Okay, so although we made it down here, at the point we weren't here yet. Okay, we weren't here. This candle was printing while we were down here. Okay, 1031 is a 1030 candle. Okay, the next one's at 1035. So while this candle was printing, told everybody you might want to take your profits. We're coming up to a level of support on futures. Man, it touched it to the penny, and that was it. It never even broke that line of support. So I am incorporating futures into my trading, not because I trade futures, but because those levels oftentimes hold very strong. Okay, so yes, I suggested taking profits here simply because we were getting very close to here. At any point in time, this could have failed to support. We could have dropped through the floor. I don't trade that way. I don't take the risk. I take the clean move from the entry to the exit. Okay, everybody asks me, how do you get to be such a consistently profitable trader? How do you do this? Why do you do that? The point of trading a strategy or a set of rules is so that you never deviate from them. Okay, the minute you start to deviate from them, they become loose rules. Okay, and once you introduce the looseness to your rules, you're also willing to change them if you want to. Okay, all right, well, I know my stop loss should be here, but since I'm playing loose, I'll go ahead and back my stop loss off a little bit. I still think the move's going to go down, even though you might not, you should have stopped out. Okay, and those are the times that the trade will continue to go away from you, and you just keep moving your stop loss back because you don't want to stomach taking the loss anymore. Okay, you have to become automatic at this. You've got to execute without hesitation, right? You're never going to be right 100% of the time. And it would be unrealistic to think you are. Okay, and you're never going to take massive losses if you go into every trade understanding that you're not going to be right every time. Right? You can incrementally increase your ability to be right by waiting for the setups to present themselves. Break and retest, waiting for the retest candle to be the same color as the breaking candle. That adds an extra amount of likelihood of the trade going in your favor. Okay, it doesn't mean it has to, but stack the probabilities in your favor. You know, you guys ask me all the time, another green day, another green trade. Yes, I'm doing this shit live with people. And how did I get better? I made changes January 1st. I made changes to the way I was trading prior to January 1st that were, I recognized that I kept making the same mistakes every day when I would trade. Okay, so this year came around. My New Year's resolution was to don't do that anymore. Wait for the setup. Stop trading for the purposes of entertaining the people that are in there. Trade for you. Trade smart. Limit the amount of trades you take. Wait for the good setups, and then you won't have 10 trades per day. My average this year is 2 to 3 trades per day. And I've had green days, not green trades every time, since the beginning of the year. I am proud of that. Okay, I'm not proud of that for the purposes of YouTube or the purposes of my community. I'm proud of that because that means that I recognized my faults, I've addressed them, and now I'm seeing the benefits of addressing my faults. Okay, because by being patient, I have to wait for the ideal setup, the ideal entry. And when I do get in at the ideal entry, I rarely get stopped out of my trades because entries are everything. Okay, you don't want to deviate from your entries or your stop losses. If you want to deviate from your plan as far as profit taking, that's on you as a trader. Okay, but before I would take myself out of a trade, I would move my stop into the trade so that I can not get stopped out unless it's in profit. And still, that would allow me to stay into my trades, and hopefully they would continue to go in my favor. You trail your stop behind it. Okay? So the reason I suggested people adamantly take their profits here was because I'm watching a futures chart work its way down to a support level. I don't mess with that. Okay? So congrats. Yes, you left a couple of bucks on the table. Big whoop. Okay? We get below it. We get immediately right back above it. Okay? I think this ended up being the low of the day. Sure did. We get back above it. We're making our way back up to resistance. We get to it. We pull back. I wouldn't have called this a bull flag, but you could have drawn yourself a trend line here and waited for a break above it. But still, I would have expected this to at least act as some sort of resistance because of what it did here. So I wasn't a call holder. I let everybody know in advance. It's not that I'm anti-call. I just don't feel comfortable in calls unless we can close above 410.76, which is our first target high. I made that very, very clear all the way down here. Okay, we did have some people play the 920 cross, meaning when the 9 crossed over the 20 to the upside, was a nice move. You could have taken it to the break back below the 9 or to a profit target line, whatever you want to do. Okay, I didn't take the trade, but it was there for the taking. We move up. We find support on this 410.13 line. This line here is my pre-market high line. This line was a bear today. It acted as a very strong support, a very strong resistance many, many times today. And then we get above it and we just trade on it, only to bounce up of it. So this was an orange box situation. We actually talked about this while it was happening. Okay, we're looking for a break out of this box. Usually when it breaks out of the box, it breaks in the direction that the move that brought us there was. So we were moving up into the consolidation. We traded sideways. We broke out of the consolidation. Some people played the orange box break up to the resistance at 410.76. And we got there and immediately came back down to support. So again, I didn't play this channel, but it was there. You could have taken calls if you wanted to off the support here, played it right up to the resistance. You know, we started to move up. We rounded off. Okay, had a double top here. At this point, ADD was still having a hard time moving higher. It's probably around that point right there. Let's see, 1133. Yeah, 1132, 1133 right here. Okay, so we were at a line of resistance on ADD, which is basically right here. Not that I trade support and resistance on ADD, but I do look for breaks above or below lines of support and resistance to reaffirm whether the move in that direction is going to continue or not. I will never take a trade based on what this is doing. Okay, this is confirmation for me if I'm debating or wanting to get into or stay in a trade. We double top up here. We get a pullback. We break back through support. We're waiting for a red retest candle. We get that red candle. I take my entry here. This was my second trade of the day. I let everybody know if we close below this, which we did, I will take a retest on SPY. Okay, I will take a SPY position here. Very, very easy trade. I tell everybody I'll wait for the red retest candle. Well, here it is. I buy my 10 puts. Okay, my stop loss is right up here above these wicks. Okay, get in here. Resistance 410.76 is my entry. It's what I'm aiming to get into as my entry. I get in. We retest it. We move straight on down to the next line down. Now, again, you can take your profits here. You can scale out here. You can do whatever you want. I did let everybody know that the next line down from here would be VWAP if we broke through that support. But for me, I went ahead and took my profits there. It was 26.3%. Now, what's funny here is that I got onto those at 76 cents a piece. And around this point here, I guesstimated that the value of these contracts would be between $94 and $96. Okay. So I put my limit order in for $96. Now, why did I put it in for $96? Because it's an even $20. Okay. I bought in at 76, got out at 96. For me, I have OCD, so having nice even numbers is nice to have. Okay. But at the same time, that could have very well cost me money, right? If we never made it to 96 and here I am holding out for 96 because of some stupid number, it could have just bounced off of that area and gone straight up without me having never gotten my profit target. So you gotta be careful with that kind of stuff. But anyway, I got in, got out, line to line, simple trade. That was a $200 profit. Having played SPX a lot this year, taking SPY trades seems very, very slow. It's comforting. Okay, this was a very stress-free trade for me. I talked the whole way through it. I kept people in this trade. Listen, don't worry, we're fine. Everything's showing that we're moving down, line to line. Let's go, line to line. You know, just trust the process. And the folks did. We get back up. We break, get to VWAP. We suggest the trade to continue to the downside. I said if we get through VWAP, we should make it down to 409.28. As we move down, we were within 6 cents of that target. I always tell people if you get within 10 cents of your profit target, get out of the trade. Okay. Oftentimes when you have levels of support and resistance, they act very strongly as support and resistance. So if you get into your puts and you wait till we touch that line, you might very well get a very big rejection, which would have you chasing your close. Okay. I like to get out of the trade while it's moving towards my profit target. So as we're moving down, I say, guys, this would be a good spot to probably start to look to get out of this trade. Okay. We get out. The people who took it, I think this was like a 35% trade, something like that, 30%, depending on the strike you take. And then we start pulling back, right? So we're in a clear downtrend. Pull back, I would call this a bear flag. Okay, as we start moving up towards resistance, it's one of my favorite plays to take. So everybody, if you're playing a bear flag, I prefer waiting until we get closer to a resistance line. Okay, well, here's resistance, 410.13. We talked about this over here. We talked about it here. It's where I got into my entries. It was support, it was resistance. Very, very pivotal line today. So when we struggled to get through it over and over and over again, I said, hey, if you're going to buy puts because you want to play the flag or the trend break or just trust that resistance is going to continue to hold, this is the candle to do it, right? It could have been any one of these. But the farther into it we get, you've got 1, 2, 3, 4 straight rejections of it. Trust the fifth one, okay? It may end up going up without you. Stop yourself out. Can't miss the opportunity to take a trade because you're afraid to be wrong, okay? So if you bought this put, you can play it right down to that same exact 409.40 line is where I'd suggest people took their profits. Again, I understand that the low is below that, but I like to get out a couple of cents early, and it proved to be useful here. We had some people trying to hold for lower, and they got caught up in some reversal type action. Sucks, okay? Get in at your profit or at your target entry, get out at your target profit. Don't mess around. Lock those in all day long, and you will grow your account nicely, okay? We start to move back up again. We have a bit of a trend line break. It makes it right back down to VWAP, picks it right back up. We start rejecting here, same exact place we rejected here, same place we found resistance here, support here, resistance here, and resistance all through here. Okay. I was asked, Jimmy, do you think it's going to keep moving up? I didn't feel good about calls at all today. I really didn't. Even when we were above this, I still didn't feel good about calls. Personally, I couldn't tell you why. I think it was because ADD was so red. Most of the top 10 was red, short of Tesla. So for me, calls were off the table. So we start to pull back. We're sitting on VWAP. We dip back below. Again, you have a break and retest situation where if you did take this, okay, your stop would be right up here. You can get in on this candle. It was a break here, retest here, and you would have been looking to get out down here at this profit target. So it took some time to do it, but it got there. Didn't suggest that trade, didn't take it myself. In fact, I think I was at lunch at that time. And then we start to move back up, and we put about 7 or 8 minutes of resistance here, pull back down. It almost makes it back down to support. We move right back up. We're looking to break through this line of resistance. We get above it, okay, we break it, retest it, and up we go to the next line. Now again, I wasn't in this, but break and retest rules apply both ways. Okay, we have a breaking candle here. Okay, this is your resistance. We have a breaking candle here, a retest candle here. That's the right color. You don't want to ever go past 2 candles, by the way. And you get into the trade. Your stop in this case would have been just below this candle here, right? Or you could have used the support line, whichever you feel good about, and that's up to you. And you could have made it up to the next target. Okay, if you wanted to stay in all the way up here because you had resistance over here, up in this area, that's on you. I like my lines. Okay, so for me, would have been a small move, but if you're playing SPX or a larger position size, it's worth it. We can't stay up here. We come back down. We break and retest to the downside. Once again, we talk about this trade, break, retest, pulls back to support. We talked about this one also. You have another break. We call this the breaking candle, right? It closed below that line. This would have been your retest candle. Stop loss is up here. I know we talked about this already. Okay, so you can get into this trade. Now, depending on how you play, whether you play candle closes or wicks above, I tend to go, especially when I'm playing SPY positions, closes, candle closes. So I let everybody know that my particular stop loss would have been 410.30. Okay, 410.30. Now I'm looking for a candle close above 410.30 to stop me out. Now, truthfully and admittedly, This move here took a lot longer than I would have been comfortable with to get to its profit target, okay? This was the breaking candle, this was the retest candle. We would have never got stopped out because no candles closed above that line, but this late in the day, theta would have been a concern. Ultimately, you would have made some money, but this move didn't happen nearly as fast as I hoped it would. Again, I was done trading. I didn't suggest the trade, although we did talk about it. I try and remind people about break and retests when they happen so that they can see them, so they can watch how they work out or not work out, how they can see how often they work out, okay? So that they can mentally take the trade and manage it in their own heads, okay? The only time that I actually suggest trades, I'll put the arrows and the circles on, okay? But I do show people the trades when they present themselves. So in this here, we are putting in lower highs, lower lows, lower highs, lower lows. I debated on taking puts here, okay? Now, I'm glad I didn't because, of course, the one time that I would have attempted to do it this late in the day, it blew right through. Fortunately, I didn't take it, but it was a consideration. Again, following the downtrend pattern, if you guys watch my Friday video, I did the same exact thing, and I bought into that, and I got stopped out of it, okay? It was a losing trade on Friday. But if we took it here, we would be looking for a lower low. Of course, it never happened. We picked a closing price around 2 o'clock. I chose my 41013 line. We get above, we almost touch it. We pull back down to support here. We're starting to close above it. Man, SPY touched me right in my no-no spot, right here. And she wanted to close there, she didn't. But the 4 o'clock candle basically landed in the circle. Doesn't count. It was just for fun anyway. And that's pretty much it, guys. We had a good day. I had a good day. I knew where to stop. I knew when I didn't feel comfortable trading anymore. And I knew when to stop suggesting trades for those who may continue to be trading. Trying to be a voice of reason every single day in our community as to whether they should stay in trades, get out of trades, not trade at all.
This morning and why it should be like this or why we would expect it to be like this. You don't want to force it or try to trade in these conditions because it's harder. It's much, much more harder than it needs to be. There's other conditions in market setups that are going to be a lot better for you as a trader to focus on than that of doing it simply because you have time. You took the day off because ICT's live streaming. All right, so now we have a nice run above the breaker. Watch. Now, you think I got to wait for it to trade away and come back down. You can trade right in that breaker. I shouldn't say it that way because you're going to take it as an entry. Watch and see if the price, if it can come back down and just touch the top of this. In the same candle, it can do that. It does not need to leave and then come back to it. It can. That's fine. That's how I teach it. There you go.
Oh, you guys can see
So
what I'm
again,
watching.
be mindful of the
That's
low here.
unfortunate. Now with it.
So we can look more at the chart. So the divergence between the NASDAQ failing to make that lower low. So this is like a turtle soup. How do you trade turtle soup? It takes the low out. It's at a level I already predefined, which was the 410650 level we mapped out earlier this morning. And then we wait for something to indicate that it's going to go higher. So what is that? We have a failure in NASDAQ making a lower low. It didn't do so when the S&P did go lower. Then we rally.
What do you mean,
So we did rally. Do I need a shift in market structure on that? No. The turtle soups don't require that. That's totally different. You're trading external range liquidity when you're trading turtle soup. What is that? The low here has sell side. It takes that sell side here. Then it breaks away. All I need is one PD array. It could be a fair value gap. It could be the last down close candle if there's a fair value gap afterwards forming. Or in this case, as I outlined, see that volume imbalance? There it is. Trades down into it and then rallies. I told you that the stop would be below that volume imbalance with the logic that I've been teaching consistently throughout all the concepts. If you're bullish, you got to find a PD array that's a discount, and you have to have it show you a defined level where below midpoint of a fair value gap or a order block, after a sell side liquidity pool has been rallied, you went below it, then you can trust where your stock can be placed. I'd like to see it run from here. It doesn't necessarily need to trade back down here. I would like it to not do it though. But if it hit it, I would expect it to react and go to the buy side there. I tell you, man, I drank 2 bottles of water and it feels like I got a gallon that's working through me. Another thing new traders feel that is a source of trouble is if they get into a trade and they get stopped out and they have to get back in to get the final portion of the move they were hoping for. They think that that is a lack of skill. No, it's not a lack of skill. If you're aware that you can still engage the marketplace and enter again, how's that a lack of skill? It's not a lack of skill. You're still seeing opportunity. You're engaging. All right, so now watch this one. We hit the breaker here. We round above it, trade back down in. We completely repriced to the breaker. See this down close candle over here? We have the fair value gap, order block, half of that, mean threshold. So we'll use, well, it's got to be below the old low because that's what this level is here. So if you were trying to use this as an entry, your stop would have to be below the old low.
That's the best
So
line.
you use like the rejection block here, which is this price. That closing price right there. I'm trying to see it here. 41.1250. And again, observe how difficult or how fast it fails on it. And you'll see when we have a much more cleaner day how it's much more engaging. But these are the lessons, and that right there, I think it would have been, is it 1250? Yep. Hit that right there. It's much cleaner price action. It's faster. You'll see the runs easier, and you'll see everybody having a different carnival-like atmosphere. Volume and balance. Now looking at this, we rallied up. We failed to take out that high. We're back below that old low. Remember the old low that I was telling you about for where the sell side was? That's this over here. So we're returning back into that old low. Might want to sweep a little bit. But there's nothing down here with the exception of this old fair value gap. That's the only inefficiency, but it has been repriced to. Does it need to come back down into it? It could touch that again. But if it traded down below this, then we're going lower on the day. Not just to take out the low, but we're going lower on the day. And why do I say that? Because we've spent lots of time trying to go lower below that old low, which is this level here. We tried multiple times going back above it, and then we tried once more here, and we failed. So the last line in the sand, if you will, for any potential run up into that old gap from yesterday's trading, it would have to mount that rally into this fair value gap higher. Otherwise, below that, we go lower below this. And that would look like let's see here. Trying to get a daily chart with nothing on it. See this candle's high? Look right here.
What's up, everybody? This is Jimmy with Trading Decoded. It is February 6, 2023, and it's 4:09 in the afternoon. Market is closed. Today was an interesting day.
We're below the fair value gap now, so.
So what you gonna do now? You broke past it.
It's
Fair
very, very
value
difficult for me to
gap.
have all this stuff on the chart
Gappity gap
and talk
gap.
to you about it. But
Gappity give gap gap.
I guess there's
Give
no other
gap
way
gap.
for me to
Give gap gap.
communicate for you to track what it is
gap
I'm
gap.
seeing. So with the exception of that divergence in NASDAQ not making that lower low, we're still just consolidating. How far, if it takes out that low, can it go? Well, I showed you on the daily chart. Here to here. So 4095.25 and then 4091.25. Watch that fair value gap that we had here. It can bump up underneath that. Treat that as resistance.
Pretty flat as far as opening help. Box advantage of bold, but I felt pretty good about it, and I'll explain why. This trade of the day was a little bit bold. Our pre-market range was pretty tight. 408.44 was the low, 410.13 was the high, and 409.28 was the midline. We found support down there at the 408.44. We had resistance up there at 410.13, and we found some intermediate support resistance on that midline throughout the morning. As we stayed in the upper half of that, for the most part, leading into the open, I did believe the move would be to the upside. I didn't play the open per se. You had the 9, the 20, VWAP, everything was moving up at open, and then we ran into this 410.76. Now, 410.76 was a pivot point, but I want to show you something about that 410.76 line. It correlates to this line on the futures at 41.30, and then we ran into this 410.76. Now, 410.76 was a pivot point, but I want to show you something about that 410.76 line. It correlates to this line on the futures at 41.31, which, as you can see, now this is a 5-minute chart. We could not get above it, okay? And if you guys have been watching or listening to me, I often find that these lines are very, very, very usable, okay? Not for my SPY trades specifically, but I'll explain how it was usable for me here to avoid suggesting a trade to continue to the downside because of this right here. So, also, we had ADD open up here and basically dropped right through the floor at open, even though we moved up on SPY.
All right, buddy. Let's see. 3 days ago. 3 days ago, you didn't trade. It was. Oh, that was Friday. Okay. So it's Tuesday.
What's up, everybody? This is Jimmy with Trading Decoded. It is February 3rd, 2023, and it is 7:35 p.m. The reason the video is so late, and I apologize in advance, is because I had to take care of some personal stuff, and I ended up leaving around noon. So I only took 3 trades today. I had 2 winners, 1 loser. Ended up making $1,150 on the day. And after I left our community in the capable hands of one of our moderators, Mr. P Daddy. And apparently they had a pretty good day with SPY falling out of the sky. So we're going to go over the trades that I took, the trades that we talked about before I left, and then the rest is history. I don't have much to say other than let's see if at least my support resistance lines played out throughout the day. So let's go ahead and launch a chart. In the pre-market, we had a pretty okay range, about $1.50 range. Put my pre-market low at 412.94, my pre-market high at 414.49, and then I picked a midline that seemed to work pretty well. I had 2 targets. I actually had 3 targets low, but only 2 of them hit, and I had 3 targets high, only 1 of which hit. So as we moved into the open, right around 8:30, we got some amazing unemployment news. Apparently, the economy is doing amazingly well with unemployment at 3.4%. I think that's actually the lowest it's ever been in history. It's pretty amazing. But apparently the market didn't like that too much. 4%, right around 8:30. Put my pre-market low at 4. I had 2 targets. I actually had 3 targets low, but apparently the economy is doing amazingly well with unemployment at 3.4%. I think that's actually the lowest it's ever been in history. It's pretty amazing. But apparently the market didn't like that too much, at least in the pre-market. We bust down through our first 2 targets low. We find support down there, and we start to run up. So as we run up, we meet resistance here at our pre-market low line, break through it, make it up to our next pre-market line. Having a hard time getting through it. Let everybody know if we get a pullback, I'm going to jump on this bandwagon trip to the upside. We get a pullback, I buy and announce my SPX position here. I ended up getting in at 1310, got out at 1440. That was a 10% gain, all in the same candle that yielded me $650. So that's a great way to start the day. And of course, I missed a big fat green candle after that, but hey, when I play SPX, I'm literally only looking for a $100 per contract gain, okay? I'm not looking to hold SPX for a long period of time. She scares me. So I'll just get in, get my $500, $600, whatever the case is, and I move on with my life. But I did buy the pullback during an uptrend. I was looking for the move to get back up to this green line. But when we were struggling to move higher here, I went ahead and took my profits. Actually, it wouldn't have really mattered because we got to my profit target number-wise before we even got up to that resistance. Then we break through the resistance, make it up to our pre-market high line, pull back. Okay, pull back, find support down here where we basically found support here. First, lower high. Okay, that gives us the ability to pull this trend line down. We put in a lower low, which finds support down here on our first target down. Lower high, support, so we're wedging. I say, okay, guys, I'm going to take my put position, trusting this trend line. And wouldn't you know, we get back up there. I aggressively play, meaning I'm waiting for this support here to hold this, or this resistance here to hold this resistance, and the trend lines here, and we're trending down. I would have taken this, looked for the bounce to the downside, and even if it would have made it to this area here, I would have gotten my $100 per contract, but it just kept going up. So I got into this and got out on the very next candle. Happened all very quickly. That was a 7.25% loss, or a minus $250. So that sucked. And we started to move up from there. Again, breaking the downtrend or the pullback, or you call it a flag if you want, whatever you want to call it. I was trusting the trend, looking for the wedge to continue down a little bit farther. It didn't. And that's why you have to protect yourself if you're wrong. You can't be afraid to take the trade, and you can't be afraid to be wrong. You just got to react if you are wrong. And react I did for a loss. Once we get back up to this resistance, we break through it, and naturally, where do we expect the move to go from there? Well, up to the next line of resistance. So we break, we retest, and we move up. I say, guys, I'm going to take a pullback. So the move of the day was up, okay? This here, at this time, I thought maybe this was going to be a reversal, but nonetheless, I waited for the pullback here. It wasn't. Broke this downtrend, continuing a move to the upside. I bought this pullback here. I got out on the very next candle. That was a 15% gain there, which was a $750 trade. And that was the last trade that I took on the day. So green, red, green. At the time, thought maybe a trend reversal. Was not. It was just a flag play, basically. And I missed it. And I paid for it because of it. So at the end of the day, ended up closing the day up at $1,150, which I'm very happy about. And we recommended a couple more trades after that. So we were talking about how we were on an uptrend. We had the trend line here. I was explaining to people, guys, if you're going to play the trend line, take your entries on the trend line. I happened to pick this one here because we were talking about it, right? So we cleared this resistance. It became support. We come back. We test the trend line. I tell everybody, guys, on this candle, if you're looking to play calls because you think the move is going to continue up, this is the candle you get in on. Literally, it had just started printing from here to here. I think that yielded 20% for some folks. Depends on the strike you're playing, but that was a nice clean move. And the reason I suggested that they get out here was because at that time, this was the high day. I don't like to play breakouts. And as you can see, that level right there held pretty strong for about 10 minutes. Okay, we got here, take your profits, get in, get out. If you wanted to stay in, you would have needed to get out anyway on this candle because it broke the upward trend. So as we found resistance there, we start pulling back, we come down, we find support, we break that support, we find our next support down. Now, why does this line happen to work out and stop right here? Well, I would ask you to look to the left. It found support here, 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 resistance here, support, resistance, all at that level. So it makes sense that it stopped there in an uptrend. This is still just a pullback. You could have pulled a flag line here, played it to the upside, but we found support, got back through resistance, lower high again, wedging. And at this point, when we pull back down here and couldn't make lower, I told everybody, guys, we're wedging, right? We're putting in lower highs, higher lows. You must wait at this point for a break of the wedge. If it breaks through the top, you play it to the resistance. I told everybody 416.55, 416.50, whatever it is that you were going to take. As this thing started printing and it was wavering about breaking this, I said it's an aggressive move, but now would be the time to get into calls. Again, I know it seems like a small move. You can look at this as a little bit of a flag. We got in at the break of the wedge. We got out up here. Some people got 18%. Some people got 20%. I had one of our guys tell me that was a $30 per contract move for him. Whatever the case is, if you're playing a single contract, it was an easy $30. If you're playing multiple contracts, it was an easy 60, 100, 90. It doesn't matter. I don't know what your position size is. It doesn't matter. I'm just telling you what I see on the chart. Once again, we reject that area. We pull back down to the same support. So essentially, we're basically just channeling. We do get out, break out, make a new high day, find a new level of resistance up here. As you can see, all these candles failed to move higher here. We pull back, right back down to support, up, right back down. So again, we have another trend. We start getting nice momentum to the downside. We get a pullback. One of my favorite plays right here. We're trending down. We pull back. It's testing the trend line as well as a line of resistance. Okay, I tend to play this one a lot more aggressive, meaning I'm going to trust that one or both of these lines will hold as resistance. We're in a downtrend. We call the entry here. And what are you playing it like? A flag. Looking to get out down here. Okay. Now, if you wanted to hold on, you can play it down to the next support. That's great. This is how I play flags. Usually in a move like that, it'd be an SPX, and that would be a very nice win. So we find support back down here at our pre-market high. We pull back to the resistance. Now we're waiting for it to, the trend line to hold as resistance and move back down, or it breaks out, and we continue back up to the next resistance. Only we don't get there, meaning the high a day. Where do we get now? By this time, I was gone. Okay, this was my last suggested trade here, and then I left after that. And we always make a joke that when I go to lunch or when I walk away or when I leave, Spy likes to start making actual moves then. And she didn't disappoint today. So we get back above. We're finding resistance at the same place that we have been struggling to move higher basically all day. So I'm going to leave my mouse here. Just look across that whole dotted line right there. Look at how many times we rejected that area. So it's not a surprise that we struggled to get higher there. Not only did we not get higher, we couldn't hold support. We moved down to the next one, break through VWAP, next support down, we pull back to resistance, test the support, break, retest, down to the support from there, bounce around. And yeah, we just kind of chopped along, ultimately making it down to this 411 line from pre-market. Actually, these are all lines drawn in pre-market. Bounce off of it and into the close we go. It got to be more sideways after the sell-off, but man, the market just woke up and said, man, we really don't like that unemployment situation that we got going on. That means that we have a strong labor market, which means people are still making money, which means people could still spend money. The Fed's going to have some work to do with that. We'll have to see. There's a case for both sides. Bears, bulls. Do I think we're out of the bull market or the bear market? No, I sure don't. I think earnings in the next couple of quarters are going to suck tremendously. That is when I will take advantage of some long-term purchasing of a couple of shares that I'm looking to get into. But that's pretty much it, guys. If you've got anything useful out of this video, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. There's a link down below to do that. If you'd like to be...
It's going to work. It's going to go back and forth, back and forth. But when you get closer to that lunch hour, and usually around 10:50
we literally got
to
1 pip
in that area,
under my
there's a lunch
TP.
macro.
Now we're fucked.
10:50
I wasn't paying attention.
to 11:10. I want you to annotate this on your charts every day. Study what price is doing. Oh, well, don't do that. Okay, annotate your chart like that and just, I guess, record it and annotate it in a way where you know what you're referencing there. New York lunch macro. In your notes, it'd be better if you had your annotation visible, right?
My TP was right here. I don't know, man. I don't know. Just leave me alone.
And you want to study when the market's consolidating, okay, you're going to get that price run between 10:50 and 11:10. What that does is it's kind of like the last ditch before, yes, traders do take lunch. Okay, they absolutely do take lunch. The algorithm doesn't take lunch, but it likes to stimulate the volume and sentiment going into that lunch hour. Because lunch hour can be a pause and continuation of a trending day, or it could be a reversal, or it could just stay sideways and do nothing and chop. Here's the wonderful thing about this 10:50 till 11:10. It doesn't matter which one of those conditions are there. You're going to see a move form between 10:50 and 11:10. And what is likely to occur is where hasn't that liquidity been tapped into yet? And that's what I was walking you through here. We've already seen sell side taken. Where's buy side? Here, and where I've outlined it here. And if it goes to that level, it's going to expand up into that area here. Now, if it was taken out that low, here I mentioned that we would look for it to go here. We didn't take the low out. We took a market shift bullish here. I told you to watch this one here. Even if it just trades in there, that's where you enter. It's called close proximity entries. You don't need a breaker. Okay, you don't need a breaker to trade above and come back down and touch it. You can do that. That's how I taught it. But I don't require just that. If I know where I'm likely to see price go to, buy side and buy side, between 10:50 and 11:10, you're going to see a price run that's originating then. It will happen regardless if there's a consolidation day, a reversal day, or is a trend continuation after lunch. It doesn't matter. You're going to see a price run begin at that. It's a small little segment of price action and time, and it's going to run for liquidity. It's going to run for the liquidity that has not been tapped yet. And that's what you're seeing here. Okay, the levels inside the consolidation between 951 and 10.28. While they're in there, everything is going to be conflicting. But once you get to 10.50 to 10.50 to 11.10, that lunch macro, and you've seen me do executions of this on my Twitter feed, it's based on this logic. You have to look for where hasn't it been tapped into yet? What hasn't been affected? Who hasn't been upset? Where is the pain threshold for the people that feel the safest? Well, anyone with a stop above this high felt safest, especially when it dropped from here. And when it went down lower than that low there, and then it created a short-term high, traded back down in, and then rally after that fair value gap. Once it ripped higher above here, that is a shift in market structure during a specific time of day, 10.50 to 11.10. That's algorithmic. It has nothing to do with harmonic patterns. It has nothing to do with Elliott wave, nothing supply and demand. It's absolutely internally built. It's part of it. It's codified. It's code. It's there. It will run for liquidity that has not been tapped. Now, this many times can be a key point for the day, and it never returns back down below it or above it in reference to if it was going lower. I'm not teaching it for you to have that understanding alone. It's for you to study how to, if you're watching these consolidation days like this, study between 10.50 and 11.10 and see if you don't get a price run like this. Don't take my word for it. Go back and through charts and go forward with it. We've seen how they, they opened it and worked that old low multiple times, inducing new shorts to chase it going lower. I mentioned this level down here. That's a fulcrum point. It has to go below that low. If it goes below that low, then you can see lower prices, but it didn't go lower than that. We had sell side taken. This right here, this returned back down in.
That would be what I was looking for. Well, I got in further down. I got in on this week here.
Into that fair value gap right here. That price run to here. This is your last like bus stop before you get to your destination.
And
if you don't get on that bus, you ain't getting on it. Yeah. That's why I said watch this one here. As soon as it traded into it or into this candle here, as close as you can get inside that volume imbalance. That's it. Now watch what happens. I'm going to look in this small little segment of price action right here. Okay. Actually, I moved it wrong. Sorry. Yeah, to make sure I do it right. Okay. And inside this little area, I'm going to change the color to
even lower than this close.
Yellow. It stands out. It's not perfect, but it's enough to get our attention. So I'm going to drop down into a 15-second chart. What do you see? I'm not going to say it, but what do you see? Two down closed candles. High, low. Fair value gap, order block, inside the volume imbalance. It trades down to it, and then boom. That's your lunch macro right there, using the 15-second chart. So when you see me doing these big run-ups and I'm building and building and building, I may be recording the 1-minute chart, but you're not seeing me using all the other charts in front of me. Then I'm looking at that. That right there is my hammer. Okay, and when I swing that, it gives those big, nice price runs. So don't run away from this lesson thinking I'm beating my chest, look how smart I am, because I was showing you, even in these conditions, it's difficult for me as well. And how you need to identify what it's likely to do to you as a trader. How did it feel for you today watching price action? Were you frustrated? Were you anxious? Were you second guessing? Were you thinking that they changed the algorithm? They're not changing shit. Okay, the bottom line is it's going to stay like this. It's going to continuously do this, but the markets are going to do one of three things. Okay, it's going to consolidate, or it's going to go higher, or it's going to go lower. That's it. That's the only things that can happen, or they don't trade that day because of a holiday. So those things are pretty straightforward. And unless you can frame the outcome to the market's likely to go higher to this level, this is my magnet in price, this draw on liquidity, this is where the market's going to reach to. If you can't clearly see that in your analysis, you are gambling. And I don't care what methodology you use or who you taught or who taught you, and it doesn't matter unless you know where it's likely to go to. There's no way you can be consistent. None. Zero. Because every logic, even mine, if it's forced into the wrong conditions where the market's not going to move, even it will fail. All my PD arrays will fail if the market's not going anywhere. You have to have the most important element. Time. Time. Nothing is going to happen in price action until it reaches a specific time of day, a day of week, a week of the month of the year, seasonality. All those factors come together and they agree, like pins in a tumbler. The lock turns. Everything comes together perfectly when it's all those other factors. But you just can't frame the whole trade idea on the basis of a simple order block or a fair value gap. There has to be other things. And you can see when you're met with additional difficulty, it's next to impossible to feel confident. But when time enters the equation in the chat, things change. Okay, things change, things become a little bit more clear. And it's like this in the last hour of trading too. There's 3 macros that run in that last 3 hours. That last hour of trading between 3 o'clock and 4 o'clock, there's 3 specific macros. Not every day does all 3 of them occur. Usually 2, but always one of them. I'm going to teach you those this year. I will be in the PM session doing them. But today, I want you to record how you felt. Don't communicate to me to Twitter because I'm not reading anything on Twitter. Twitter is just for me posting. Like I'm when I tweet something, I'm casting it out there into the abyss. Whoever's listening is going to listen. If you're going to ignore it, that's fine. I'm not looking for likes. You don't even need to like them anymore. It's just for me to be able to reach out to you on days that I'm not doing the live sessions. So if you've enjoyed today, that doesn't necessarily mean that you found it easy, but if you found some insight from this, if it makes sense to see and understand when it's difficult, how to navigate it, what to do with it, if it was helpful to you, give it a thumbs up. Otherwise, I'll just catch you on the next one. I don't know when it will be the second one this week, so today's Tuesday. I'm quite certain it won't be tomorrow. So it'll either be Thursday or Friday. We'll do our next one. But I will tweet that schedule and time when we would be meeting again by way of Twitter. Okay? So hopefully you got something out of this. If not, I apologize. I can't make the market do what I wanted to do. I have to wait for it to do what I know it's likely to do. And there'll be better market days. I promise you will be smiling. But you should be happy about this one because it's teaching you where you're going to lose money and blow your account. If you don't identify it, you will fall victim to that. Like everybody else has done in the past, you won't know it's coming until it's too late. So until next time, be safe.
By the way, the guy I was talking just now, his name is Michael too. Just to put it out there. Putting that out there for those that like it, those that don't like it, doesn't matter to me. I put it out there. His name was Michael. He's not dead. Well, his name is Michael. I got this, man. I got this. I'm tired, man. I'm tired, bro. Sometimes the market got you asking yourself, am I doing the right thing? Why am I not making money yet? Huh? Why am I not making money yet? Ow. Shit. We're back again, right to 700 bucks, right? If not be able to really clear 1,000, not really be able to. Ah! Ah! Alright. That's pretty good rejections in there. Pretty good rejections. And the fact that this candle was just one big candle is not it's not helping the matter. And this is a black line here where price dropped off from the 15. I guess the line is more here. So this is the high we're risking up there. Took a short here, you're risking up here. So about 100, looking for 200. Which would mean you want price to go and break these lows. And I mean, price does have this whole place to come to. So there's that too. It's quite the rejections, to be fair. Quite the rejections. Let me ready up my short. Gotta wait for this candle to close. Well, it does have the rejections, but it is pumping up right now. Huh? Bro, shut up. Shut the hell up, man. Shut up. Oh, shut up, bro. Oh, hilarious. Oh, I make myself laugh. Bro, shut up, man. Like, oh my god, I blinked. And what is happening here? Look at this move. Ooh wee. Yes, sir. Breaks the black line. Breaks the black line. Breaks the black line. Breaks the black line. You. Oh, so if we had got in here, I guess we'd have made our TP. So we'll leave at 200, right? about 200, 180 is 200. I mean, so in here, risking down here plus, so about 95. So 95 times 2 is 190. I'll just get out here right now because I've had too many scars, too many experiences. Nice close underneath that black line. Nice rejection on the 5. It's volume though. Finally. Man. Man, I'm tired, bro. I'm tired. I feel like we already know what my strategy is right now. You know, wait on the day, get the lows, blah blah blah. But I feel like it's missing something. That's why I was up till 2 a.m. yesterday trying to find something. That's why I'm listening to this guy and the other different people I've watched on this live stream. I don't know what I'm looking for, but I'm looking for something. When I find it, I'll know. But I think this guy I was listening to, this ICT guy, I think he may be the closest to what I'm looking for so far, and other people I've watched. So I'll have to study him today. Watch almost all the videos he has on YouTube already. But I don't know. I'm looking for something. Feels not yet complete. It almost feels like this strategy I have works well for this type of market. But it's working in 2020, but then again, this market did start in 2020 because of that massive drop that the market had. So the market I'm talking about is a market that goes up and down versus the SPY, which is an uptrending market. So there will be times when it's just going up. What happens then? How do you trade then? Another thing you should take note of is there was not a single close below this black line. Eh? Not a single close below the black line. I don't know, it's screaming short to me right now. Screaming short to me right now. Short. Because it had this, it's been a very weak up move. I mean, weak in a sense, it's a lot of rejection to the upside, to a lot of rejection to the downside. And so on these two candles, really good rejections, and now rejecting still. I may be wrong though. Well, I'm risking here on this trade. I think price may want to fill this trade down here. I don't know. Price has been downtrending for a couple of days now. Overall, it's on an uptrend, yeah. If you look at the 15, let's see. Overall, it's on an uptrend. But it's been downtrending for a couple of days now. It just feels like it wants to go. It wants to break these lows here. So I feel like. But then it's all the way up here though. So could he want to break these highs then and continue on his uptrend, leaving this behind? Regardless of whether or not it wants to break this or it wants to continue here, it's not as though I'm going to make money from the continuation. I'm not going to leave my trade running. It's just it just looks like it. But why am I in this short right now? Well, the price just looks bearish. That's really it. It's not. I'm not in this short here because I think it's going to continue down there. I'm in this short because price looked bearish just at the time I got in. That's all there is to it. One can only hope it doesn't continue to spike up. See how it behaves down here. Every time price has come down, it's shut up, shut up, shut up, shut up. But you could also say it's every time it's gone up, it's come down, come down, come down, come down, come down. Where the fuck does it want to go? Well, I'm risking the ultimate high, so not ultimate. I mean, I'm not risking up there, but I'm risking here. So if he really wants to shoot back down, then I know obviously price is not going to be playing like this the whole time. Eventually it's going to break either this way or that way. What seems more likely to me, I think it's going to come back down and break downwards. Because price on a downtrend, that's one confluence. Two, a price on the mini downtrend at least. I think it's going to break downwards to this consolidation here and then probably start coming back up. Two, well, price is at resistance, so is that why as to why I think it's gonna continue downwards, break down this way? Well, I only have the fact that price on a downtrend, and I don't know, that's just what it looks like to me. There's this gap it needs to fill, but you could always say there is this gap. I mean, this is not, you don't need to fill this gap. You already did. Like, He had this. He already traded. There's no place here he needs to fill. But there's this gap down here he needs to fill. You could argue that it's already been traded. And that was a fill of this, so it's already been traded. You could really argue that, like you could really argue that. So if you look at it, ignoring all the way back here, if you look at it like this, then yeah, this needs to fill before continuing upwards. If you want it to fill, it doesn't need to do anything. Or I want it to fill. Otherwise, then we can just break out of this, trade up here, continue to trade slowly up here. May not be 1 day move, but yeah. It was pretty good for a long so far. The only thing that is making me irky about this trade is that we've not had a real momentum, momentum showing bearish signs. We've not had a real black heavy candle or something. We've only had the rejections from, which are very good ones, but yeah. And it broke this now, so with the break of this, I think I wanna get out of this trade, but I'll be looking to get out on ideally break even, but whatever I get, I guess. I don't like the fact that I broke that, so I'm going to try and get out break even on this trade. If I'm gonna get back in short again, I would need to see a close below this black line. I prefer the line here versus here. Maybe I should have gotten out when it closed above. Maybe. is gonna be the momentum candle that we're looking for. Let's first get out first. Let's first look to get out first. That's good momentum candle though. I got $7 in it. 5, whatever. But yeah, that's good momentum kind of there. And it technically kind of closed below the line even. It's good. It's okay candle. I don't like the rejection at the bottom. I don't like it that much, but it's okay. It's not too bad. So there's a lot of bearish momentum. Let me play one quick game of chess. Take my mind off shit. As you can't see that one, right? Oh, that's interesting. I've not seen that move. He's gonna check me there. Oh shit. Wait, why didn't he just capture? I just realized he could have captured that. I didn't even see the capture. I'm pretty sure he just saw it and he's like, freaking hell, I should have captured. That's not my business right now. Wait, I don't have a place to go for this night right now. I don't want to give him the check either. Because if he attacks this night, I don't have a place to go. So I can come here. I'll just bring this here for now. That's a good close. That's a good close. Short. We'll do a short. That's a good one to hold. What can I go with this actually? Capture this. Can I capture? Can I do any better move with this? With this fork right now? I can't. I don't have any better move. Damn. Whatever. I think I wanted to bring my rook here, but I didn't. I don't know why I didn't do that. It's a redundant move now. Can't come here anyway, so. Like, he's trying to bait me with the knight, but the knight is mine regardless, sir. Mm. If I capture this, captures a capture. Nah, no need. Oh shit! I didn't see that for a second. Oh yeah, I'm starting to panic a little bit. I don't know why. He only has one piece, Michael. He only has one piece. Don't stress it. Don't stress it, Michael. Don't stress it. Alright, so we got good volume rejection in here. It closed below the black line, but then it came and broke above again. But now it's rejecting like it. So we've had our first good volume rejection in there now. Question is it going to reject well, or is it going to yeah, is it going to do that? I low-key want to stop trading right now and just I want to go study. Find myself. My heart is heavy. My eyes watery. My mind in pain. Oh, emotions running. What shall I do? Trading is heavy. No, what shall I do? What shall I do? Oh, I just wanna make it. Oh, I just want to make it. I want it perfect. 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 Let's play on that game real quick. Oh, that's cool. That was very rude. Very freaking rude. The fact that you think to do that, that is rude. How did this play go again? I forget. You see, it's times like this that I'm like, what do I do? What do I do? What do I do? Oh my God! I completely forgot about this. Shit. I should have brought my queen. I couldn't even bring my queen here. So with this check, I technically lost my queen. Because I was here. There was nothing else I could do. Alright, that's fair. One more game. I've seen this play before, but I kind of forgot for a second. But it's fine. It's all good. That's the first time I've lost my rook in that. Obviously, my man is not here. That's the first time I've lost my rook in that encounter. I normally don't lose my rook. I've seen that before. Normally, what would I do? Normally, it plays that. I see this. Oh, I would usually come up. Sometimes I'll come up with my rook. So if he captures that, I'll capture. Or I could Actually, going queen here. Queen here is actually the best move, I'd say. Queen here is the best move because. Oh shit! It's my turn to play. Oh. And he forgot about the checkmate. The bishop was what was protecting the checkmate. I should have started moving my king first. Should have come up with my king first before bringing the bishop up. Have I lost 2 games back to back now? Right, we gotta win this one. We gotta win this one. Not a lot of people protect double. So most people won't use their pawn, but whatever. I like to double up people's pawns because it's a Ponzi scheme. interesting place to place his queen. Well, the drop is finally happening. How's the drop we're waiting for earlier? But, oh well. I mean, our TP with that risk, we're risking up there, and our TP, no, we're risking up here. We're risking up here, bro, up here. Our TP was like all the way down here, so it is what it is. I'm annihilating with the knight right now. With the knights, absolutely annihilating. Why didn't I even take this first? I just realized, like, why did he and you? Why did I could, oh my god, I'm crazy, yo. I'm crazy, yo. Man, I don't know. I feel something is missing deep down. I don't know. I feel we're very close to being complete, but we're not yet complete. Because if we were complete, stop screaming, Michael. Then we'd have been able to hold this trade, right? We got in here. First of all, I was risking all the way up here. That's just overkill. Like here was fine. Maybe a little higher because of the spread, but here was fine. Here was just overkill. Here +2, man. I mean, it's about the same place. I think that's why I raised there, because when I did the numbers, it was about the same high, anyways. Oh, I got out because this broke here. So I wanted to see that volume coming short, and it did on this candle here. And rejection. So it's not a bad place to enter short. Even this candle wasn't bad. Because this volume came in. This one came to try but rejected. So that's good. That's not even a bad place to get in short too. So there or there. Skin these highs. Having something like this. Skin here. So 50, you probably wanna, that's why if you wanna add 90, then well, see, price is not moving that much today, so. If it was 50, then you're looking for 100 just down here. If it was 80, then you're looking for 160 down here. Regardless, you have to break this zone. Man, something feels. One more chess game. Mm. Not yet. It's kind of annoying. Not gonna lie. Kind of annoying. Just because I didn't take it first time, you're pissing me off now, innit? Okay. Oh, I gotta take it now. Yo, Jeff, what's up, man? How you doing? Is that nice control to close the day yesterday, sir? Yes, sir. I mean, I don't know, man. I don't know, sir. I don't know, sir. I don't know. I don't know, sir. I don't know. I don't know. Is that really good? Is it really that good? I guess. Well, yo, did you see did you see this the beginning of the spiral though? They won't give me my profits, bro. Give me my profits. It's good because of that I got 200. Fair enough, fair enough. I don't know, man. I feel like something's missing in the trading though. I almost wanna close the stream and go study a little bit. I don't know. I feel like something is missing. I feel we're almost there. Something is missing that is not making me break past 1,000. You know what? We've been between 400 and 800 the whole time. So something is missing, obviously, right? Yeah. What is missing? See, it didn't break this. Had some very nice rejections in here and it didn't break. Oh my God. Oh my. Oh no. Let's go. Let's see if that was a 15 low though. It wasn't a 15 low, it was just a base. So I guess price wanted to break these highs, not the lows. Wasn't a bad trade here for those that trade on the 5 though, I guess. Could have taken risking 90 probably. Oh, she actually got 180. Oh my God, what is happening? What is that news? What is this? Oh, oh my God. This is crazy, bro. This is crazy. Oh, it turned around. Oh, well, shit. I don't know, man. I don't know. I don't know, man. What do I do? What is happening to me? Why do I feel so uncertain? This, 2 weeks ago, this would have been my trade right here. Oh, we get a pullback. There's a low right here. Let's go, baby. We got our black candle here. We got 40. Let's risk a little bit lower. Let's risk 80. Let's go. That would have been my trade 2 weeks ago. But man, This some bullshit. Some bullshit. Nah, man. I don't know. I don't know. I do not know, sir. Oh, and yeah, if price broke down here, well, price broke down here, we're looking for a continuation. Like once price breaks the prior day low or high, we're really looking for that continuation, and that's what price gave here. But obviously, I'd have probably been out somewhere in here or something. But so after all of this choppy action, price ended up forming uptrend. But this was the significant part here. If you had broken through this base here, it may have continued downwards. So this was not the first rejection. Second rejection was not a bad idea to take that trade 40, risking under, maybe another 40 under, so maybe risking 80. Just in case it decides to wick through, risking 80, looking for 160. And if you held, you end up getting 320, which is 444. We don't care about, like, I have no qualms on missing all the big moves per se. Like, it doesn't, that's not the strategy right now. Right now we want to pinpoint our trades. I love trading structure. Should I just oh my god. Where did the volume come from anyways? Like, what the hell is this shit? I truly didn't expect you to do this kind of, like, man, the US 500 is SPY is a crazy. Trading this market is actually pretty fun, man. Alright, let's go back to our, let me see some stuff here. This way up. Likely to bounce off of here, but 15 low was here. We have one here now, but 15 low was here earlier, so we're risking down here. And price came here, we could have gotten a bounce off. But we had our short here. This, like I said, this was good volume, but I didn't like the rejection at the bottom. And then this had this rejection, so this was not a bad short here, but you had to be very wary of what price stayed around here. So when you saw these rejections, it's probably time to get out. Yes, sir? What do you mean, yes, sir? Probably replying to something I said earlier, but I don't know what you're replying to at this point. Fuck. Damn. Just imagine being in this trade right here and look at what you had to go through. You went up, boom, went back down. Like you had to really close your chest on this one if you are not taking profit already, you know. Crazy. If you look at the 1 minute, you could see it could easily have continued downwards. The only point where this was an indecisive candle, to be fair, it wasn't too. It was bearish, but it was an indecisive candle overall. This was the point where okay, this is likely to continue upwards. So at that point, would you have gotten in long, risking all the way down here still? 240. Looking for 480. Okay. Man, that's crazy. One minute is 1 minute chart is very noisy. It's a lot of data. Doesn't mean you can't trade off it. I get tired very quickly trading the 1 minute because a lot of data you have to process, you have to filter. A lot of data you have to filter. That's the so there's a lot of data you have to filter. So your brain is like, well, on the 5 minute, at least you have 5 candles that have already been filtered, you know, to show you what was happening there. Per candlestick. 5 candles per candlestick that have already been filtered. Got a massive drop from here, so I mean, but this was due to this prior day, so it may not even hold today. It may actually just consolidate up there. Maybe it comes back a little bit, but yeah. Again, we don't take data from over a day. That's just personal. Should I just trade? Because this was such a clean structure, and I saw it. It's not like I would have to risk all the way down here per our current style. And technically, for me to take a trade risking this low, I would need price come around these highs in here. So I don't know. I worked out yesterday. I did like I upped my weights. I benched 80 on each side, so that's about 205 total. And then I benched 205 or 210 total. I don't know. I think the bar weighs 45 pounds. If I remember correctly. I've checked this before. £45. So I benched 205, and then I did deadlift of 205 too. But the one I liked the most was the clean and press. That one you really put in work on clean and press. I only did 55 on each side, so that's 110 plus 45, so that's 155. Yeah, that was 155 on each side for my clean and press. But that clean and press, bro, I died there. I told myself we're dying today. We are doing this today. Today. After the emotions I went through trading, nah. I took it out on that training yesterday, bro. That bench, the 80 felt light. Okay, I'm just lying. It didn't feel light, but I did it on good time, very good time. It only started to really affect that because I did 2 reps, 15 sets, rest 15 seconds. So, or between 15 and 30 seconds rest per set. So I did most of it with only 15-second rest, and yeah, it was nice. Felt good. Anyhow. The black line yesterday was here. Yeah, we took this trade on open. Yeah, I remember now. We took the trade on open. The line was somewhere here. Yeah, somewhere here. No, it was right here. Yeah, it was right here. For this drop. Here's an example where price did form something here, a base on the 5, or it's on the 5 though. There wasn't really a low formed, so to be fair, there wasn't a low formed, so technically there's no low here. So your best bet was risking an actual low versus when price actually forms a low on a move. So here, if price actually formed a low, even though it's an ugly low, it's still a low. A low is a low, ugly or not. It's just the uglier it is, the more you don't want to use it. So in this case here, price formed the base, but also formed the low on the 5, right? That's what matters. If it's just a base, doesn't mean you can't use it. You can, but it's just a base. You know what? Fuck! Why do I have this feeling in my guts? It's ugly feeling. It's like there's something missing. Something I'm overlooking. Something. Fuck. Alright, Jeff. I appreciate you tuning in, my good sir. I'm gonna go and watch a bunch of your ICT man's trading. I'm going to see, maybe I'll find something there. I honestly don't like ICT trading. Not I don't like it. I just feel like it's a lot of lines on the chart. It makes the chart look ugly. It makes the chart look ugly is what I feel like. I don't like a lot of lines on my chart, but I don't know. There's a connection with the way the guy talks. It's almost like, I don't know. It's interesting. So I'm hoping to find something. But if it's all just ICT, maybe inside the ICT I may find one thing in there that I like, maybe. But ICT, you have zones, you have lines, you have all these terms, fair value gap, liquid. I saw some guy propulsion, bro. I was like, what is happening here? I don't know. I just like a simple structure trade, just simple structure based trading. Just like today, very simple. Like if this was 2 weeks ago, I'm telling you, I don't know if I was streaming when I was doing 5-minute structure trading, but you guys, if I was streaming, you see that I would have taken this trade, and that's why I called it out. Like it's so clean. It's low, high, break of structure, right? low base formed with a low on, but it's on the 5, not on the 15, right? And then break of that base, creating a higher high than this. This is a low, creating a higher high, and it's really high compared to the base. And then a pull back to that base with nice rejection. Even on the first candle rejection, it's actually kind of fine, but you kind of want to wait for a little bit more confirmation that, okay, this base is actually holding. So we had this candle, and then we had good confirmation here, and then next candle, you could take it on that next candle, risking, literally you could risk below just a little bit, the low there, or a little bit lower. Some people just risk exactly that low. I will risk like down here. But back then I'd also risk a little bit lower than this low. Now I'd risk like down here. Like you'd have to really want to not hold this low for you to get me out, you know. See how clean it is? Just beautiful structure. And then we took a trade off of this black line because, well, price had a nice move up from this. It was a very nice move up from this point. So we got a pullback here. Got a pullback on the first candle of the day. It was weird. So we wanted a black candle, but we didn't. We got this doji. Given that the line is here, it's not a bad trade. You could have taken that, risking, you know, the low. The only low you have on that day is right here. So you want to always risk a low. Like if you take anything, at least to me, from trading, from my trading, and from what I've seen, if anything, you just want, at the very least, risk a low and try to risk the most current low. Try to risk the, okay, not the most, but try to risk at least the most current low. Try really just risk the low, man. If you just risk the low, you're way safer in you're way safer with your trading, versus if you want to try and find, okay, I'll get in here, let me just risk right here because it's too far, so let me risk right here. Like maybe you may not have gotten stopped out, maybe it may have worked, but you could have gotten stopped out very, very close to getting stopped out. If depending on if you risked it at the tip there, you did get stopped out, right? So always risk a low, and even if you end up waiting, you still ended up taking your TP on this move up, right? And then here there was a low formed. Always risk a low, and I've been saying low, but the SPY goes up and down, so try to risk a high too. Same thing, like even on yesterday's trade when we had our line here, we have our line here, want to at least risk this low. This thing came and touched this low, we're like, okay, no. But from here to here, it's quite small, so I at least risk this low, and then when this kind of form, you want to risk a little bit higher than this. Sorry, I say low. I really high, a little higher than this high. And price did come down. We knew that price would have some kind of reaction here, but we don't like to use much of pre-market data. We like to use where there was volume. So we like to use this prior days data. And we knew price would react here because it's after 6:32. So 6:30 is when what's it called? After 6 a.m. 6 a.m. is when market really opens, pre-market, like volume really starts to come in. And so this volume, this consolidation, when your price will react there, well, yeah, man. Just always risk an obvious high and an obvious low. It has to be obvious. Has to be. Yeah, man. Shit. Tired, man. Annoying. See, I said this stupid thing may come down, but hey, those are more risky trades. If you like, obviously okay, I don't know if it's obvious, but I've seen it many times. But that, you know, it's going up, and then with the volume, because this brand new volume, like you may as well say this day started right here. You may as well say this is the start of this day, or start of a brand new session. I don't know what the hell happened. Just like when the Fed news came out the other day, it's a brand new session right here. So rejection is a nice rejection. Once it broke there, you didn't even need to wait for it to break. It just looked good. You could have taken a short, but now because your high is there, You want to risk a little further than that, maybe risk like 170 or something, looking for that 340 short, right? So anyhow, trading, man, trading. Going back to these highs here, and do you know where the low is? You're gonna risk when so it's gonna pull back. We may have a rejection, may pull back, even breaking this low and then rejection, maybe. Or nah, I doubt, because of this prior candle. I think we'll have a second candle pullback. Whether the candle is going to close black or blue, I'm not exactly sure. However, this is a good high that is going to, it may bounce off, and this is a good low you could risk. You may pull and touch this highs here, but it's a very good low you can risk, and a safe low will be this one right here. And that will be a very good trade actually, because this like I said, and today it's only 11:20 right now, and market still has about 4 hours left. So this, you can literally call this line the start of your day. Like this could be a whole new day, right? So, but we also know that there was a lot of volume on these trades. So you can, once price comes, rejects twice, the second rejection, you can take a trade risking this low or this low, and you will very, very more than likely get a push upwards, because it looks like, because the price has broken out of consolidation and blah 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 blah. Anyhow, my chest, bro. Structure. All right, I'm gonna go, man. Thanks a lot, Jeff. Keep safe, bro. One love. Adios.